Good afternoon. This is Ken Long from Tortoise Capital Management. Pardon my congested voice. Got a head cold. I want to review 5 trades from the trading room today and conclude with a quick review of the daily health check, see where we are in the market. The first one was right at the opening. We had a gap down in the VIX, and you can see price came down. The purple line is the VWAP. The light gray line is actual price line on 3 minutes. Blue line, thick curvy blue line is the 10-period regression. Black line is the 30-period regression. Bollinger Band plus or minus 1 standard deviation on a 30-period look back. Have the MACD histogram with 10, 20, and 8. Okay, so here we go. So the market opens. VIX gaps down and starts rolling up at the regression line crossover, so rlco20120313, the VIX. I go long, entry at 2168 with a 30-cent stop, betting that this is the low of the day. This trade gets up to about 22 and rolls back, and I end up taking a scratch or a no-lose. There wasn't enough in there to capture a profit, and I was holding out. So left some money on the table. So the first trade was a scratch. Almost at the same time, the small caps, IWM, also a RLCO regression line crossover. So it gapped up from yesterday's close. Big gap up. Started rolling over. Regression line crossed. I go short at 81.85 with a 30-cent initial stop. It gets down to about 81.75 or about a half an hour-ish, or 81.70, about half an hour, and then rolls back up and scratches me out. So 2 trades, 2 scratches. Later that morning, however, good trade. Well, they've actually been both good trades so far, played by the rules. So now we're looking at EWZ. The same move that caused me to scratch IWM, the market started getting stronger, and Latin America and Brazil were clear relative strength winners. And so I quickly came over and looked at EWZ, and I buy the regression line crossover breakout here, and I go long at 66.50 with a 25-cent initial stop. So I'm just below the median of the Bollinger Band region. So we buy this breakout here. It quickly zooms up and then starts a little stair step up. You can see the gray line at, I take a second position at 66.90. So I've got a little over an hour, almost 2 hours in hand from the first trade. 66.90 add a second position, continues to go up, gets up above 67.10 and then starts pulling back. And then I go ahead and exit both at 67.08. And that pulls in about a net of about 2.8 R between the 2 trades. So entry, second entry, exit both here. It pulls back and then shortly thereafter takes off again. When it makes a new high of the day, I go ahead and re-enter. I get filled at 67.15, and then it gets up to 67.45 pretty shortly thereafter. And we'll see the continuation trade on that in next. Let's see where it is. There we go. Okay, so that trade, the continuation trade then, the entry 67.15 when it takes out the previous day's high, the intraday high, and a pretty tight stop. I used a 25-cent. It goes up to 67.71, pulls back to 67.60 where I go ahead and cash it, and that gives me another 1.5 R. So that's about 4.5 R in EWZ on the morning trade going into lunchtime. And you can see that when both regression lines leave the Bollinger Band, I call that the train leaving the station, and that looks to me like the beginning of trending behavior. And it really started that from the opening, as you can see. But the real trending behavior starts here, and then it came back all the way to about 67.10 by the next hour over lunchtime. The next trade up was after a period of sideways quiet channel in the VIX. I saw this as sideways quiet channel. This was the earlier trade in the VIX that ended up scratching. but I watch it all day. And then after sideways quiet channel at about the end of the lunch period, it starts to move up while the rest of the indexes are moving down. So I go ahead and make an entry here. This one also peters out pretty quickly because every index in the world started to turn around shortly thereafter. So I end up scratching this VIX trade again. So that's 3 trades that scratch. And I get on board IWM for the next move. And when the VIX was in that sideways quiet channel, IWM was in its sideways quiet channel and then trending downward. It initially made an rlco here at about 82.10. I didn't take that one. When price went into the Bollinger Band, then out of the Bollinger Band, though, that's where I decided to pull the trigger at 82.35 based off the crossover that occurred here. So I get my entry at 82.35 with a 25-cent stop as usual. It moves up immediately to like 82.80-ish. And by that time, so we're looking at almost 2R in hand. As it starts pulling back, I'm thinking about just cashing on that hesitation. It reverses pretty quickly. I think about adding a second position, but it is the afternoon, getting towards her, and I really want to just stalk this exit. So I just elect to not add. I just ride it out, and then I'm getting an exit here about a few minutes before the close and get filled at 83.05. So that gives us 70 cents per share, and that's a net 2.7R. So another nice little afternoon trade right there. What I elected to do on this one was sell 3/4 and then fire one of tomorrow's bullets with and keep a quarter of the position and use markets money to fund the overnight move, because I think we're going to have a strong follow-through based on where we are in the market, which is up next. You know, this is a daily chart on SPY. We're still in bull quiet mode. These are all dailies. And you can see we've been in this tight 30-day regression channel. The regression line is the middle black line that's moved up. And after a pullback at the end of last week and a nice channeling and overreaction move with small range days, today we got the big move up with a very strong finish. So I'm expecting a more of a follow-through tomorrow. And the reason I'm positive is because it took out the swing high at 137. That's been almost a year-long coming. We've been watching it. It sold off from 137 all the way down to 107 and has crawled all the way back up. You might call that a cup and handle. I don't know what it is, but today was the first real big up range day we've had since middle of February, and very strong close. So I'm expecting a little more tomorrow, and that's what it looks like. So pretty good day for the intraday traders. Reasons to be able to hold this overnight with swing traders in mind, but using the overnight risk level instead of intraday, so that our dollars at risk per trade are constant. So this is Ken Long from Tortoise Capital. Good trading. Keep your risk measured and your powder dry.